Happy Friday, friends. It's Shayan with Integrity Home Mortgage, back with your rates rundown for October 24th, 2025. Despite the fact that we are now in day 24 of the government shutdown, we did actually get a little bit of important data today in the form of the CPI, the Consumer Price Index. It's an important measure of consumer level inflation, and it's likely the last piece of consequential information the Fed's going to get before their meeting next week. So, what did the CPI tell us? Well, it told us that while inflation is still running a bit hot, right around 3%, it's actually not quite as hot as many had expected or perhaps feared. You might say, well, Cheyenne, you've been talking recently a lot about how inflation is not as important as jobs in the current environment. So, why do we care about CPI? Well, we care because the Fed is in a position where they have to make a decision. They have to make that decision next Wednesday. And as we discussed last week, they have very little information off of which to base that decision. Uh, in the absence of new information, the path of least resistance, and arguably the most logical path, tends to be to assume that an existing trend will continue. Prior to the shutdown, that existing trend was rising inflation and a weakening job market, right? That's worrisome on both ends. And that is the reason why Fed officials have been so measured in their recent comments. They've been careful not to overpromise on cuts because if inflation continues to rise, not only will they just have to pump the brakes on cuts, they might actually even have to turn to rate hikes if it gets bad enough. This CPI print, while it's just one data point, should serve to allay some of those Fed concerns around resurgent inflation, at least for the time being. Uh, it will, at the very least, provide a little bit of air cover so they can more easily defend an action that they probably, frankly, would have done anyways. Um, Market reaction, as you might guess, has been mildly positive. Rates markets are improved by a few basis points this morning from where we closed them yesterday, although we did close them yesterday at the weakest levels of the week. That being said, mortgage rates continue to hang right around their best levels in about a year. According to Freddie Mac, the nationwide average 30-year fixed rate mortgage was made at 6.19% this week, which is down 8 basis points from last week. Housing has been extremely resilient, obviously, and home price appreciation continues to make affordability an issue. But it should be noted that the opposite is actually true for refis. The amount of equity that the average homeowner has in their home right now is at an all time high, and rates are in a really, really good spot. In fact, if you look back over the past 3 years, there have only been about 6 total weeks where the average 30-year fixed rate mortgage was lower than it is today. Opportunities exist out there, even despite the complicated landscape. Take advantage of them. Have a great week, and we will see you next time.